What's up, YouTube? In this video, we're going to talk about ASML Holdings, ticker symbol ASML. And year to date on this company, it is only up 6%. Over the course of 1 year, 46% green. A dividend yield on this company of 1%, $6.26 per share. ASML just reported their earnings yesterday. They beat on EPS, but missed on revenue just barely. In their earnings release, the CEO made a comment here that I figured is worth sharing. The semiconductor industry is working to get through the bottom of the cycle, and our customers expect the inflection point to be visible by the end of the year. Customers continue to be uncertain about the shape of the demand recovery in the industry. So therefore, they expect 24 to be a transition year. Based on our current perspective, we take a more conservative view and expect a revenue number similar to 23. So in 24 is going to be relatively flat in comparison to 23. But they also look at 24 as an important year to prepare for significant growth that they are expecting in 2025. So maybe this will be a year for them to plan and prepare. Also within the year, maybe their stock pulls back because they've got, especially with a no growth, there might be a decent pullback in within the stock price for us to have a chance of buying this at a cheaper company than where it is right now. Also, they do have a share buyback program, which is it's a pretty hefty one at $12 billion or 12 billion euros. See right here, they got 12 billion euros in 2022 to 2025 timeframe. And right down here, we can see total price or an average price that they're buying back is $612 or $583 USD. And they've currently purchased probably in USD, probably less. Well, I mean, they're doing $12 billion buyback in euros. So they've got a long ways to go before they hit that. So they've got another $11 billion in buybacks left at, this is roughly where they're buying back at $583 per share. So once we get over to our summary of our price target on this company, that might help us understand roughly or give us another data point to go off of when we get to that point. So as we go through their financials here, we can see revenue, gross profit, net income, all three trending higher. Very, very good trend on that. Gross margins sitting very good at about 51%. Net margins, 28%, also doing pretty good. Revenue, gross profit, year-over-year change, we can see it's a bit of a roller coaster, and should be anticipating very little to no growth next year, so we would assume this to be much lower next year. Return on invested capital sitting at just shy of 48%. Very, very good there. Cash to short-term debt. So they've got $16.7 billion in short-term debt, $6 billion in cash. So one thing let's take a look at is going to be their financials. We want to see, so their total current liabilities. One of the things that stood out to me was the unearned revenue is $12 billion of their $17 billion. So basically they have no other debt. I mean, they have other debt, but majority of their short-term debt is all held in unearned revenue. And they're obviously we just went over it, and their gross profit is or net margin is 28%. So if you take 28%, figure that's what's going to come down to the bottom line because they do sell a product, so it's going to cost them money to earn this revenue, right? Especially after it flows down through R&D and SG&A and everything and taxes, you should see about 28%. So 28% off of this would leave you with about $3.5 billion of actual, you can eliminate $3.5 billion off of this, which would then take $17 billion down to less than $14 billion in total current liabilities. And they've got a little bit more of net unearned revenue down here at $4 billion in long term, which is about another $1.3 billion. So then altogether, you get to take off about $6 billion. So it puts them at about 20 to $21 billion in total liabilities. So as we come down here, instead of sitting all the way up here at 26 billion, they should be sitting down here at 20-ish billion dollars in total liabilities. And that cash and short-term cash is $6.3 billion currently. So our net income to free cash flow here is sitting at $7.2 billion net income and $5.7 billion in free cash flow. So pretty good. I always like to see when net income is always a little bit higher than free cash flow. We can see the trend on our free cash flow is just exploded higher, pulling back a little bit, anticipating to be flat next year. Share count dilution, they have a heavy buyback, so this we will expect to see this continue to drop down lower, especially if the shares on this company decide to pull back based on the forecast for this next year. Dividend though on this company is just trending nicely higher. Very good dividend on the company. Capital expenditures are growing quite a bit but have pulled back just ever so slightly. But as this company grows, you probably would expect CapEx to grow along with it. One thing I noted that I thought was interesting, worth sharing, is their inventories are up quite a bit. That might be somewhat impactful to their business right now as well, based on their technicals. We have three other companies to compare it to: LRCX, Cisco, and TSM. As we scroll down here on ASML, there's zero red flags for us to go over, so that's always awesome to see. 5-year growth rate is very good on ASML. Obviously, we're not anticipating much of a growth next year, which we've already gone over, but 5-year average is sitting pretty good at 16% revenue, 24% EPS growth, doing much better than the competition. Gross margin, pretty good gross margin, right in line with everybody else. Obviously, we can see where gross margin could potentially end up. Hopefully, in the future, maybe they can continue to increase their gross margin a little bit more. Operating margin, doing really good. Not quite as good as TSM there, but doing very good on operating margin. Profit margin, same difference. So pretty good, 28%. Could potentially reach 40% if it's as good as TSM one day. Free cash flow, ASML, $5.7 billion in free cash flow, still pretty good. Return on invested capital, the best across the board at 48%. PE though, you're gonna pay a premium for this company because of its margins here, but that's gonna kind of throw off our multiples valuation because our multiples are all significantly less than where ASML is. So these companies, all three of these companies might be undervalued. I know TSM is for sure undervalued. The other two companies here, I'm not sure, but that will throw off our multiples comparison. So we might not include that in our summary. Peter Lynch valuation here, we have Peter Lynch fair value of $532.99 per share. Multiples comparison. So this is what I'm saying is it's going to bring down, we kind of compare our PE here. Our average PE is going to bring down our price target on ASML down to $344.12 per share. So we will probably not include that one. Manual PE, we take our market cap minus cash, add in debt, divided by cash from operations, gives us 33 PE. So it is telling us we are overvalued based on that valuation method. Price to book, also 5-year average 18, currently sitting at 21.6. So again, telling us we are a bit overvalued based on price to book. PEG ratio, very, very fairly valued on PEG across the board. So currently and forward looking, telling us our PEG ratio is price to earnings divided by growth is pretty good. We have a Graham's valuation calculator giving us a free or an intrinsic value of $600.54. We have a dividend discount model telling us $618.97 per share. DCF valuation, I gave them 25%. Analysts have 0. Their average growth rate is 41 or 40.5%. So I figured 25 should be relatively fair. That gives them a DCF price per share of $496.32. Rule 72, we have our three sources of EPS growth rate for an average of 20. That goes into 72, 3.5 times, and then that goes in 10 years, 2.83 times. So we can double our EPS 2.83 times, but I don't believe that our future EPS is like $140 or 140. I think 70 is way more fair for future EPS, especially since it's sitting at about 20. So it gives them a fair value of $712.37. At our summary page here, we have currently ASM is trading at $583 per share. Fair market value, what we just came up with is $592 per share. 30% margin safety, if you can ever get it, $414 per share. Analyst price target, $779 per share. So we know the company is buying back shares at $583 per share. So they're usually companies don't, with a smart management, don't overpay for their shares. So maybe $583 is roughly a good place to buy. Also join in on their buying frenzy. They got there's $11 billion buyer there that's just going to continue buy back shares. It's going to reduce share count. It's $11 billion of buyback going on there in that range potentially. So you can anticipate a support range in that area. I would assume, unless they start waiting and see if their stock doesn't pull back a little bit more this year. But we'll head over the technicals right now to figure out roughly how technicals are trading. So we can see right about here, right where this green line is roughly where they're buying back shares. But we can see if this trend holds and pulls back, and maybe this stock pulls back to 490 or 450 there, I mean, might be 460 range, who knows? And that's assuming it pulls back to this range, especially if earnings aren't going to be fantastic for the next 2, 3, 4 quarters. Then that might warrant for a potential a little bit of a sell-off on this company. It might give us a cheaper price to buy, but that is anticipating that. So it's a little tough, obviously, to figure that might happen. Although technically speaking, it looks like it could. Honestly, even if it pulls back to here, that's nothing to worry about. But I think that would be a very good place to start picking up shares on ASML. And then that would also tell you that throughout this whole downtrend here, I would probably guarantee this company is going to be buying back shares if it continues to pull back. So we already know they're buying back shares at $583 per share. That they'll probably buy back more shares even on a pullback. So that's it on ASML. If you found value in this video, drop a like, subscribe, comment, and we'll be back later with another stock and health video.